Good evening, it's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets. And it's the Wednesday, the 2nd of December 2015. Okay, be sure to visit CFDs.com. This video is being brought to you by them, the leading specialists in spread betting and CFDs. You can certainly earn up to a 25% bonus if you open up an account with them. Be sure to do that. Please do drop me an email if you do open an account. Alternatively, you can visit the educational website, which is www.cfds.education, to certainly learn more, and I'm constantly updating with charts and analysis throughout the day. Okay, interesting times. Where do I start now in terms of what's happened in the last hour or so? In terms of the US, we have 3 active shooters, if I can recollect. I think there's a confirmation of up to 12 people dead, and certainly is not looking good in terms of terrorism fear. We've had oil prices drop below the sub $40 level. Copper has certainly dropped as well. Okay, the dollar certainly has spiked in terms of movement. So if I bring up the chart, the US dollar, you can see that the dollar itself certainly pushed higher today, although it did reverse later on into the session. But we certainly have pushed higher in terms of the Aussie and Kiwi, certainly languishing at the lows as we speak. We also have the euro back above the 1.06 level, so therefore indicating a risk-off scenario. And that was on the back of a report from the Reuters in terms of the ECB keeping or maintaining their forecasts. If I can recollect correctly, here we go. Yes, Bloomberg reporting that ECB to present largely unchanged macroeconomic forecasts in documents sent to national central banks. So therefore, no additional QE. Okay. If anything, more than likely a potential short-term rate cut. And that's the reason why you've seen the euro obviously recapture that 1.06 level, and is still not selling off even with this terrorism fear in the US at present, even though US equities certainly have come under immense pressure. So, okay, so let's try and decipher the market now based on that information. In terms of the UK, obviously we had the weaker construction data. Oil prices below $40, so therefore that's a potential risk-off scenario. Although we did have a false report, though, just need to make you aware that we had a false report which is still being denied and is still being debated, and it certainly caught me off guard because I switched my bias so long and got stopped out. It's starting to look like the WSJ, which is Wall Street Journal report on Saudi Arabia, is a bit blown out of proportion, explaining the market's lack of reaction. Obviously, oil stubbornly holding their 40 despite this bullish news. Saudi Arabia and Gulf states willing to cut oil production. Now that news has come out 2 to 3 times now. The first time it came out, then it subsequently rejected, then it came out again, and now it's come out for the 3rd time, and still no real movement higher on oil. Although oil may well uptick higher based on the terrorist fears that are emanating out of the US, and we shall see exactly how that transpires. Okay, so going back to the actual charts now, let's bring up the Euro Stocks itself. Okay, on the daily chart, looking at the Euro Stocks, you're still languishing at the 200 MA. You cross-verify or you cross-reference that with the S&P Europe 350, which is still languishing at the 200 MA resistance and therefore is weak. You can look at the Stock 600, again 200 MA upper diagonal trend line, therefore weak. Now, for this story that's obviously emanating out of Reuters and has come out later on today, stating that the macroeconomic forecast will remain the same. So there's no real overt concern about inflation or the lack of inflation thereof. Then obviously the Mr. Draghi is compelled to keep the status quo, and nothing additional occurs. Okay, so no additional bazooka or no additional QE gun being fired, and therefore, given the fact that Miss Yellen was very hawkish today, I think that's the end of the euro moving lower. I think we're maintaining our 1.06 level for the foreseeable future. Okay. And I don't think European equities will rise considerably, especially with this terrorism fear that we're looking at present. Very, very unconfirmed. Remember the very names going around after Boston bombing were terribly wrong. There are unconfirmed reports that one of the shooters reported name as Farouk Saeed. Okay, so basically you have an Arab or a Muslim name and certainly emanating or certainly doing the rounds, and therefore that is considered as risk off. Why? Because obviously it's basically attributed to terrorism. Okay. If it's an isolated individual with regards to that Parenthood shooting the other day, obviously the market's totally ignored it. But if it's due to terrorism, that obviously creates a risk-off scenario. And as we all know, uncertainty and fear, stock market hates. Okay, right. Going back to the analysis on the European markets, looking at the German DAX now. Obviously, 2 red candles in a row. looking for a potential third candle. Looking at your 60-minute chart, bear in mind though, your HNS target is 11,040, currently trading at the 11,110 level. That's where we closed, and therefore there is more scope of moving lower. So the HNS target certainly remains active. The MDAX and obviously the tech all share still remain weak. Looking at the chart of the CAC now, cross verify this. I was expecting an inverted head and shoulders formation, that obviously didn't transpire. So the weekly chart certainly exhausted on given the Feb 75% has held. Daily chart horizontal resistance has held and therefore weakness. HNS target or HNS pattern on the 60-minute chart. Your neckline is currently at the 4900. Your head is at the 4970. So you are looking for 4830 on the downside. So you're looking at 4830, which is around this region here. Okay, so if I just use my diagonal trend line, connect the pivot low from here to here, basically slam into the 4800, 4830 level. Okay, for the French CAC. Okay, now given the fact that the French CAC currently already is trading or more or less close around the 4880 level, you are looking for further downside. Okay, now in terms of the actual 10-minute chart, let's just bring that up for you as well. You have this HNS formation, excuse me, and certainly looking for a lower low and lower highs. So you are looking at 4800, 4880, which is where we already are there, and then you are looking at 4830, 4820, potentially a pivot lower 4780 as well. So certainly bearish, especially with this terrorism news emanating out the US. I think there's up to a report of up to 12 people dead. Sad, very very sad news. Now looking at the daily chart of the FTSE 100, you have a potential topping tail here, weakness. Now again, like I said, the story or the news with regards to this report with regards to the Saudis potentially cutting along with the Iranians, etc., etc. I mean, again, it's a lot of unconfirmed reports, and it certainly is a puzzling story. But if that is true, then obviously oil starts to push to uptick higher. Now look at the chart of oil. If we bring up the chart of oil quickly and give you an insight there as well. Crude oil, okay, so 10-minute chart still certainly holding that pivot low of 39.8, recaptured 40. Looking at the daily chart again, you're looking at a double bottom support. So double bottom support held as far on the chart of crude. So certainly interesting as to the next price action, given the fact that we've got terrorism concerns and obviously talk of this potential, cut or even the thought that they're entertaining a cut. In and of itself is bullish for oil, and that should help the FTSE 100. But in terms of US markets will remain under pressure. Why? Because of terrorism fears. Okay. Also, European indices will certainly remain under pressure as well, namely due to the fact that the report with regards to a lack of QE tomorrow and Draghi disappointing as well. Okay. In terms of the FTSE 100, let's bring up the chart of the 60-minute chart now of the FTSE itself. Again, you are holding that resistance zone at 6450. You do have support at 6400 or 6395, so again, that certainly needs to be observed. If that were to break and that were to crack, then you are looking at 6330, which is 200 MA. Again, terrorism can cause markets to go into a risk-off mode, and certainly is a very bearish for the markets in and of itself. Okay, so certainly take that into consideration as well. The 10-minute chart of the FTSE 100, we put in a potential topping tail, and that topping tail certainly has held on the FTSE 100. In terms of support, you have support at the 6410 level, and then obviously support at 6400, and then you have this diagonal trend line support again at 6395. So certainly cautious in terms of shorting the FTSE around the 6380, 6390 level, 6400 level. I would certainly exercise caution. Because the sell-off itself certainly has, this area here certainly has a lot of support going for it. Okay, so I think that's a good summation of the actual markets themselves. And now again, keep an eye out for the Euro USD, because that will be the major player in the next 24 hours. Now, like I said already, the Euro USD certainly has broken out of its downward sloping wedge pattern. It certainly has put in a potential bottoming tail, and now is on the verge of potentially moving higher. So certainly bullish from that perspective. So certainly creating a base here, and has created a base even with Yellen's hawkish comments. It's certainly created a base. So again, that's good news and positive for a currency pair. Now, given the fact that we've had the reports from Reuters with regards to macroeconomic projections remain the same, then Mr. Draghi is not as dovish as everybody expected him to be, or even anywhere near where the market has expected him to be, given the recent rally that we've obviously witnessed. So European markets certainly are looking very bearish, especially with this news with regards to terrorism emanating out of the US. and that will certainly impact the Asian markets and European markets going into tomorrow as well. Remember, Euro USD has become a risk-off currency, i.e. a risk aversion currency. Money generally tends to float towards the euro because of the anti-QE trade, i.e. sell equities, buy euros, or i.e. short euros closed, and it triggers a short squeeze, and therefore the Euro USD gets bid higher. Okay, so especially given the fact that we had hawkish comments from Yellen, still the euro failed to fall is a positive sign for the currency itself, and obviously is negative for equities. So interesting scenario, and we shall see exactly how the next 24 hours unfold with regards to Fed and the ECB, both at loggerheads themselves. Okay, so it should be very, very interesting. But given the early leaks that we've seen thus far and the price action Euro USD, you are looking at a weaker price action in the next 24 hours in terms of equities. Trade safe, and be sure to visit cfds.com for your trading needs. Goodbye now.